So as you can see, this is topic 4, developing business plans. So by all of you will be able to explain what is a business plan and what it contains. Most of you will also be able to analyse the benefits, so the good points and the drawbacks, the bad points of having a business plan. And you will know that you can do this when you have produced a blog entry and also answered an exam question. So first of all, let's think about what we need a business plan for, and that kind of tells us what a business plan is. First and foremost, we need it to clarify our own objectives, so to get clear in our own heads where we want the business to be. There's an old adage, if you don't know where you're going, you'll never get there. So a business plan sets out what a business wants to achieve, what the owners want the business to achieve for them, what they want to get out of the business. A business plan also helps us monitor progress. We can check how well we're doing against targets. So if we set a business plan target of a turnover of £200,000 within 2 years, we can check progress against that. We also need a business plan to convince a bank or someone else to invest in us. It's all very well convincing someone of a good idea, but until they see facts and figures, it's difficult to get money out of them. It's also likely to improve the success of the business. The more we think about what might go wrong and ways to avoid what might go wrong, the more we reduce risk. Now you'll see there I've very intentionally, so as I was saying, I've very specifically pointed out the word reducing capital letters there. We don't ever get rid of risk in business. We try to reduce it to manageable levels, or levels that we accept based on the reward that we're going to hopefully get in return. We never totally avoid it, we just reduce risk. There are certain questions that a business plan should answer. So we've said what the purpose is. We're kind of getting into the details of what the business plan should do for us. It should tell us what problem does the company's product or service solve. So is there a problem out there that there isn't a car that's fuel efficient enough? Is there a problem out there that there isn't a bar of chocolate that's low in fat? So what niche will our product fill? What is the company's solution to this problem? So if you go back to the example of a car that isn't very fuel efficient, we make a fuel efficient car that's good looking, it's lighter, it might be a hybrid car. If we look at the example of the bar of chocolate, we make a bar of chocolate that still tastes like a regular bar of chocolate but has less sugar or less fat in. Who are the company's customers, and how will the company market and sell its products to them? So find out who they are by market research. Once we've found out who our customers are, what are we going to do to tell them about our product and get them to buy our product? What is the size of the market for this solution? We have to actually find out for the business plan whether there are enough people who might buy our product. The business plan might tell us that market isn't big enough, so we've got to try and target other people. What is the business model for this business? How will it make money? Will it do that by selling lots of things at a cheap price, or will it sell a few things at a very expensive price? Who are the competitors, and how will the company maintain a competitive advantage? How will they stand out against its competition? How will why will people buy this product rather than someone else's product? How does the company plan to manage its operation as it grows? Most businesses will start out obviously small, but we want to try and get them bigger. So how will we do that? What is it that we're going to do in order to get bigger? Will we try to fund it from within? Will we have to borrow from banks? Who will run the company, and what makes them qualified to do so? Often an entrepreneur might come up with an idea, but they have to be realistic and think, do I have the experience to run what might be a very big business? Do I have the financial knowledge? Do I have the marketing knowledge? What are the risks and threats confronting the business, and what can be done to mitigate them? So again, we know there's going to be risk, but what can we do to mitigate or avoid or reduce those risks? What are the company's capital and resource requirements? So do we need factories? Do we need people? Do we need land? Do we need labour? Do we need enterprise? And what are the company's historical and projected financial statements? That's what banks especially will want to know. How much money are you going to make? How much money do you need to start up? The benefits of a business plan then. A business plan is useful in helping entrepreneurs to clarify their objectives, as we say, and to consider their business idea thoroughly from every perspective, which should improve the likelihood of its success. It enables owners to know precisely what needs to be done in order to meet their business objectives, including targeting specific customer groups, how we price our product, what goes into costing the product, so how much do the raw materials cost that we need in order to make the product. And it means that we have to think about sales forecasts, how many of our products or services we might sell, and the marketing of the product in general. So how do we find out what our customers want and how do we give it to them? It's definitely an essential document in persuading lenders to invest capital in the business by demonstrating why it's likely to succeed. So banks insist on seeing a plan before granting loans and overdrafts, for instance. They want to know they're likely to get their money back. Even if you think about Dragon's Den, they're very small. Those pictures are business plans. They tell the dragons how they're going to get their money back. A business plan should not just be produced for a third party, such as a bank manager, when trying to raise finance, but should be viewed as a valuable tool to help running the business. It shouldn't just be put away in a filing cabinet. It has to be a working document which clearly defines objectives against the business can monitor its progress. It should be reviewed regularly and should be updated whenever the circumstances of the business change or need clarification. As usual though, we've got to bear in mind drawbacks as well. For a business plan to be a valuable tool and a persuasive document, it needs to be both accurate and realistic. It should not only show strengths, but it also needs to show weaknesses and threats. Many business plans underestimate how much it will cost, for instance, to get a business off the ground. It will underestimate how much it costs to actually run the business. Operating costs, so the cost that a business has from day to day, usually or quite often turn out to be more than the business accounted for. Business plans often take an overly optimistic view of the potential of a business. They make assumptions about the size of a market without any support in market research, or they can be vague about identifying competitors and their products and their prices. Many business plans tend to be over-optimistic about their sales forecast and also unrealistic about when payment can be expected. For example, if we assume that the business will receive payment from customers as soon as it sends out an invoice, or as soon as it demands payment, we probably won't allow for delays and the effect that these will have on our cash flow. So say, for instance, if we were a vegetable supplier supplying a restaurant, we have to be aware that that restaurant might not pay for those vegetables for 40 days, 60 days after we give them to them. So that means that we have to pay for those vegetables ourselves because we bought them off someone else, but we might not have the money to do that. We have to be aware that we might not get the money for our sales as soon as we make those sales. So from a lender's point of view, if we're a bank reading a business plan, we've got to be sure that that business plan provides us with accurate and realistic financial information, because they'll want to know, the bank will want to know that you understand how you're going to pay back a loan, for instance. So what actually goes into a business plan then? The first thing that you would look at when you picked up a business plan, the first thing that would hit you in the face would be a one-page executive summary. That's going to tell anyone who picks up the business plan, what is the business? What market is that business going to be in? What is the potential for the business? Is it always going to remain small? Is it going to get bigger? Or for what period of time? It's going to tell you the profit. It's going to tell you where funding comes from and how much that funding needs to be. And it's also going to tell the investor or the lender what prospects they've got. So again, think back to Dragon's Den. This is how much you are likely to make from this venture. So the first thing we'll see when we look at a business plan, when we think about the contents, what goes in it, is the executive summary. This actually, right, let's look at it in more detail what the business plan will have in. First of all, we'd have to have a description of the business. So what is the business? So you would include things like its name, its location, its legal structure, which we'll come to in another topic, and a description of the actual product or service. You would also have to include personal information. So the plan should include who the owners are, who will be managing the business, as well as their CVs, and an account of their business skills, their experience, their financial commitments. So if they have a loan, a mortgage, for instance. You'd also have to put any details about any support they're receiving, so such as from a mentor or a Prince's Trust who's offering you advice. You'd also want to say any training you've received or you're going to receive as well. The plan should also include key staff and staffing requirements, so what it is that we need from our staff and what they're going to be doing. It's also going to have to say where the business is actually going to start, so it needs to talk about the location. So the next section we'll need now is an actual more in-depth description of the business, the products and services, or the products or services it's likely to produce. So we have to give a more in-depth description or an explanation of the way that the product is different from its competitors. It's no good just copying someone else's products. We've found that in the first topic, finding business ideas. We can't just copy someone else's. It might be that it's trademarked or patented. So we have to come up with our own idea. We have to say why or how it's different. We have to analyse our competition. Why will we be better than them? Why will people buy our product rather than theirs? What is it that we can try to emulate? What is it that we can try to learn from? Is there any competitors that are particularly vulnerable that we could hope to take over from? Is there any competitors that we should be particularly wary of? We need to talk about how the product will be developed and what new products are being considered as replacements. So we have to be aware that our product might not last forever. So will there be things following up from that? Will there be things that we can develop that go alongside it? So for instance, when Amazon first set up their shop, it only sold books. But they realised that they could develop that product into a website that sold pretty much everything. Then we've got to look at intangible assets and protection. Now, if you remember, I said intangible things are things you can't hold in your hands. So what assets, what things will we own that we couldn't physically put a value on? So say, for instance, if we have a copyright of next section, or part of this describing the business, we've got to look at the market. So the size and the expected growth of the market. Is the market a big market already? In which case it might not grow very much. Is the market very small? In which case are we expecting it to get bigger? Or is it a small market that we expect to stay small? All very important to know. It's fine to stay in a small market that we expect to stay small, as long as we're aware that we might not make as much money there as we would in a big market. We need to be aware of the analysis, or we need to analyse the market by segments. So is it mostly young people? Is it mostly older people? Is it going to be males? Is it going to be females? Is it going to be people with lots of money? Or is it going to be people who are looking for a budget option, for instance? Once we've broken the market down into segments, we then have to say which segments we're going to target. We can't always, or we very rarely can target all the segments at once, because we wouldn't be keeping people happy. We've got to try and target the segments that we can best match with the needs of our product. We again have to go into our competitors. Who are they? Who owns them? How big are they? How much of the market do they control? And what are they going to do in response to our new product? We have to think about our existing and potential customers. Who are they? How they buy. So did they buy in shops? Did they buy on the internet? And why they buy. Is it because it's a necessity or is it a luxury? we have to think about distribution channels. How are we actually going to get our product to the people who are buying it? Do we sell it to them direct? Do we sell it to them via shops? Do we sell it to them over the internet? Next thing we need is something that we call a situational audit. Really convoluted, posh title, basically means we need to know where the business is at now. This requires data collection and for us to analyse what that data means. So we've got to be able to determine which opportunities to pursue. So if we know for a fact that one product that we're thinking of will make us more money than another, perhaps that's the one we look at. It means that we can identify our competitive advantages. Again, what will we be able to do better than our competitors that will mean that either we make more profit or people are more likely to buy our products. It gives a background for the formulation of a strategy. So it tells us this is where we are, this is what we need to do to get where we want to be, and we need to do something called a SWOT analysis. So SWOT stands for strengths, weaknesses, opportunities and threats. I'll come on to that in a little bit later. Next we need to do a statement of aims and objectives. So this is now where do we want to go. So the last one was where are we now. This is where do we want to go. So this should be a statement of what the business should achieve over about a 5-year period. Aims should be expressed in terms of a hierarchy of objectives, becoming progressively more detailed and specific. So we might start off with to become the biggest firm in our market. That might be a long-term plan, but then we need very specific things that we're going to do in order to reach that. So we'll come down to very specific things almost day by day that we will do, which will ultimately help achieve our long-term aim of becoming the biggest business in our market. We've got to come up with a vision, what the organisation will be like in the future. Part of that vision will be a mission statement, so a statement of the overall purpose of the business. So what does the business exist to do? SMART objectives, so specific, measurable, achievable, realistic objectives. Again, we'll come into that in more detail later. And functional objectives, so specific things that each part of the business can be doing in order to achieve the overall objectives of the business itself. We also need to give some details on our strategy, our long-term plans, and our tactics, our short-term plans. So our situational audit is where are we now. The previous slide was looking at where do we want to be, and strategies and tactics say how are we going to get there. So a strategy is a broad approach to the achievement of objectives, so really wide-reaching, long-term. It summarises how we're going to fulfill our objectives. Tactics, however, refer to the details. So to use a sporting analogy, an objective might be for Manchester City to become the biggest, most well-known club in the whole world. A strategy in order to do that could be win the Champions League, and then tactics are set on a match-by-match basis of how they're going to particularly win particular matches. Next, we have to have a marketing plan. This should show the gap in the market that the business startup is intending to fill, the results of any market research that have been done, the type, size and location of the market, a description of potential customers such as age, gender, where they are, so their location, the amount of income that they have, and the price that they're prepared to pay. It needs to look at a comparison of the business's products and services with those of its competitors and their respective strengths and weaknesses. So what are we better than our competitors than? What are they better than at us than? The marketing plan should also include information about what makes our product or service unique and therefore likely to make it succeed. It also needs to include details of promotion, so how will we get people to know about our products, and selling techniques to be used, and how the product or service will be priced. We need to have an operations plan as well. This one's pretty self-explanatory. So the physical location of where the business is going to be. The production process, so how are we going to turn those inputs into outputs? What is it that our business is going to do? Facilities, have we going to have an office block? Do we need an office? Do we need a garage? Do we need a factory? The equipment that we have in order to fulfill the transformation process. The scale and location of operations, so how big does it need to be? The capacity of our business, how big, how much can we actually do? How much can we make? How much can we sell? Both now and in the future. ICT strategy, how are we going to use the internet, for instance? Engineering and design support, do we design things ourselves or do we ask other people to do them for us? What materials do we need? What inputs? Inventory levels and stock control, do we hold lots of stock? So say, for instance, going back to my example about if we are a vegetable supplier supplying a restaurant, do we hold weeks worth of stock, in which case it might go off, or do we just hold a little bit of stock and risk running out? We've got to think of purchasing arrangements. Where do we get our raw materials from? How do we pay for them? Sources of supply of key resources. What happens if our suppliers run out of things? Where will we get them from? Quality control plans. How will we make sure that our customer service is always good, that our products are always up to standard, that our customers are always happy? And any staffing requirements that we might have. Is it just us? Next, we need a section on how the business is going to be managed and organised. We need something that's called an organisational chart. Once again, something we'll look at in detail later, but it basically shows who is responsible for who we need to talk to if we have a complaint in the organisation, who our managers are, which staff work for us. We need to know who's going to be the senior managers, who's going to be in charge of the overall running of the business day to day. Corporate governance. Now that means who's going to make sure that we do what we say we're going to do. Is there going to be someone outside of the organisation who checks that we're living up to expectations? Staffing requirements. Do we need someone to fill a senior management role because we don't have the expertise? Who are going to be the people who are key to our organisation that we can't afford to lose? So if it's a restaurant, for instance, you might have a chef as the key personnel, because if he left or she left, that would mean the business could lose its overall appeal. Recruitment and selection. How are we going to find new members of staff? How are we going to train them once we've got them? And how are we going to reward them? Are we going to reward them just with money, or are there other ways we're going to try and reward them for good work? Labour relations. So how are we going to make sure that everyone's happy in the work that they're doing, and therefore motivated to work harder? And linked to all of these, what is the cost of that going to be? How much of our wage is going to be every month? How much is training going to be? How much is it going to cost to recruit and select new members of staff? So as we said, there are certain forecasts we have to be able to make. We have to be honest about them, we have to be realistic, but we have to forecast how much we think we're actually going to sell, how many units we're going to sell, and how much those units are going to be worth. So how many individual products are we going to sell, and how much are we going to sell them for? Based on that, we have to be able to work out how much profit we think we're going to make, or in the short term, possibly how much we're going to lose. We have to work out our cash flows, how much money is coming in and going out of the business. In each case, this should be month by month for a minimum of 2 years, so we know where the peaks and troughs are going to come. We can very closely match what we expect to come in to what we're going to spend. We should also very much agree that on what assumptions we're going to make behind the forecast. So say, for instance, as we said before, are we going to assume that people pay us straight away, or are we going to assume that they pay us after 40 days or 60 days? We also need to think about matching those predictions to the sources of finance we need. For instance, a cash flow forecast might allow the entrepreneur to analyse cash coming in and going out, as I say, which therefore means they can analyse where they might need an overdraft. They might decide, when it mentions here about payback period, for instance, in investment appraisal, how long will it take to pay off a loan? If a loan's going to take 10 years to pay off, is it worth buying the new piece of equipment that takes that long to pay off? A lot of this in financial data you will come into in more detail in the second unit with Miss Henderson, but it's basically looking at the finances of the business and working out, is it worth the risk of spending a certain amount of money, because are we going to get that money back or not? We need to look at the finance that is needed and repayment. So the plan should specify how much, when, and in what form finance is needed, and also what it will be used for. So investors don't just want us to borrow money off them to buy flash cars. They want us to use it in order to make the business stronger. They want to use it to pay wages. They want to use it to buy equipment, for instance. The forecast speed of repayment or rate of return on the investor's capital should also be included. When I say about collateral offered, you might borrow money from a bank and put up your house or a factory as collateral, meaning if you don't pay that loan back, they can take that asset from you. They can take the house. They can take the factory. In your business plan, there needs to be some form of long-term planning. So where does the business plan to be in 5 or 10 years plus? So it gives investors an idea of what they can expect in the future. Now, I mentioned about SWOT analysis earlier. This is how the business intends to build on strengths, to exploit opportunities, how it will reduce weaknesses, to overcome threats. So, strengths, the S. Strengths look at internal things within a business. So what is the business good at? So for instance, a business might be good at producing high quality goods and services. That strength, the fact that they're good at producing high quality jewelry, for instance, might lead to an opportunity. Now, an opportunity is external, so an internal strength might lead to an external opportunity over a competitor because, for instance, in this example, they make poor quality jewelry. So if we are very good at making internally, if we are very good at making quality jewelry, then externally that leads to an opportunity because our competitors aren't. The opposite of that might be an internal weakness, such as relying on one type of customer. So Aldi, for instance, they rely on customers who are on a budget. They aren't inclined to spend too much money at the moment. That might lead to an external threat of the business collapsing if that customer takes its business elsewhere. So say, for instance, if people in Aldi start going to Lidl, or when people start to have a little bit more money, they stop going to Aldi and Lidl altogether, Aldi might have a problem. So the internal weakness is relying on one type of customer. That leads to an external threat. So the way to remember whether it's internal or external, if the business can control it, it is internal. So the business can control how good its products and services are, that's internal. The business can control which type of customer it targets, that's internal. If the business can only react to it, then that's external. So if your competitor has poor quality, you can't control that, you can only react to it. Now, as I've said a number of times through the presentation, much of what is included in a business plan is covered in other topics in more detail. So don't panic if there are a few things that you've come across, such as cash flow or SMART, that you're not entirely certain about. I'm just bringing them in now so you understand that everything that we do in some way links together. So you have to make sure that you remember whenever you talk about one point, it can have an impact on something else. So remember, that's level 3 thinking. Doing this might lead to something else happening, which means that. Okay, we've decided we're going to set up our own business then. We know that we need a business plan. We know what needs to go in it. But we have to be realistic. Do we have the experience and expertise to make good decisions? So we know that what goes into a business plan. Do we have the experience to come up with that information that is going to be accurate enough for us? Starting and managing a new business involves many challenges and making difficult decisions. Small businesses don't have large management teams. Most don't have a financial director to advise on money matters or a marketing manager to advise on marketing issues. Most entrepreneurs do not have the skills necessary both to plan and run a business and need to seek specialist advice on a range of issues, including drawing up business plans and financial matters. So small businesses often have very few people making very important decisions, often people without experience. Entrepreneurs are often people who have a good idea, not necessarily people who have a background in business. There are many sources of advice available though, just in case you were starting to panic there. For instance, there are loads of small business advisory services. If you looked in the Yellow Pages, you would find them business consultants or just business advisory services. Also, you'll probably have heard of people like accountants or bank managers. These tend to provide advice and guidance on how to manage the finances and how to set up the finances of a business when they're very new, so where to obtain finance, both when they're starting up and later on when the business wants to expand. You might still hear it called Business Link, but Business Link is a government organisation that was set up to help entrepreneurs set up their own businesses. It isn't actually called Business Link anymore, it's just through the gov.uk site. But basically it offers all the support needed to start, maintain and grow a business. So the information that the gov site gives you then, the gov.uk, it helps businesses start up their business plan and it helps them raise finance by providing them information on loans and government grants, for instance. It also gives advice on issues such as wide-ranging as what type of computer to use, what's the best bank account for them, and becoming more and more important now, how they can be more green. So what grants they can get for using solar panels, for instance. Something else we've looked at recently, it might give them advice on whether they are breaking any trademarks or whether they are breaking any patents with these new products that they're hoping to launch. It might give advice on how to export, what markets we can export to. Are there any laws that might impact us exporting? It can also provide us, if we want to set up our own business, with a special advisor that can come with us to meetings with bank managers. I've had meetings with bank managers. They can be quite daunting if you're young and you've set up the business for the first time. So it's nice to have someone there who can act on your behalf. The government doesn't just provide this kind of facelessly. It sends entrepreneurs to local experts who have experience and knowledge in different areas. It also gives you a special phone line that you can ring with questionnaires, and often gives you a specific mentor, so someone who might stay with you from the very first time you write a business plan all the way through to when your business becomes more successful. In addition to the government, there are other sources of information. Every area has an enterprise agency who tries to help people set up their own businesses. There's chambers of commerce. I believe that North East Chambers of Commerce has one of its offices in Tyne-Dock in South Shields, for instance. There are trade associations, so if you're trying to set up to be a carpenter, for instance, there might be a local trade association that gives you advice on what you could do. Networking is a very powerful way of getting information, literally just talking to people who do similar types of jobs. So going back to the example on if we were a business supplying restaurants, just talking to other restaurant owners, you might get to know someone who wants a new supplier for their veg. Just talking to people can be very powerful. The Prince's Trust is a massive source of information and of help. It focuses on, I've put 12 there for some reason, but it's 18 to 30 usually. It gives help to set up businesses, it gives advice and funding as well. You can apply to the Prince's Trust to set up your own business. At the opposite end of the scale is what's called Prime 50 Plus, which is the Prince's Initiative for Mature Enterprise. Same type of thing, advice guidance and a little bit of funding for people, this time over the age of 50, who want to set up their own business. Just a scary little fact to end up on there. Research suggests only around 26% of new businesses were started with no advice whatsoever. So a quarter of people, when they started their business, didn't ask anyone whatsoever. You've got to ask yourself, what actually happened to these businesses? Do you think they were part of that 95% of businesses who failed? And a further 22% only asked their friends or their family or other informal sources. Family are great, they'll love you till the day you die, but that might mean that they don't really tell you the truth when you ask them a question. So if you're asking them, do you think this business will be successful, they might just tell you what they want to hear, not necessarily the truth. So what have we looked at then? We know what a business plan is now. It's just a collection of documents that tells us and tells prospective investors where the company is now, where it wants to get, and how it's going to get there. It makes sure that we know what our product can do, how it differentiates us from our competitors, and how we intend to try and make it a success. It makes us aware that we have to be honest with ourselves. It tells us how much we're going to hopefully sell. It tells us hopefully what our costs will be. We also know that we need to get advice from people who aren't going to give us just tell us what we want to hear. So it tells us that we need to get advice possibly from the government or an accountant or a bank manager. And from all that,